NVIDIA crushes earnings, but the broader market reaction is muted. This is Invest with Jacob. Okay, guys, so in yesterday's video, we were talking about a bullish breakout scenario. We were looking for the bulls to hold support and push higher. They were unable to break out of the range all day, ended up testing the lows, and then after hours with the NVIDIA earnings, basically traded flat. So the question is, are the bulls running out of steam? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, the market basically traded in a pretty tight range until the Fed minutes where it dropped a little bit and mostly traded sideways for the day. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. The first thing we're going to look at is this 1-hour candle. It's the last one of the day. It's the one after the market closes from 1 o'clock Pacific time to 2 o'clock Pacific time. I'm in the Pacific time zone, so that's the time frame I use. But it's right after the close, and this is the NVIDIA earnings candle where they spiked to the high, they spiked to the low, and they're going to close basically flat on those earnings. Where last time the market broadly bought these earnings, spiked at 20, 30 points immediately straight up, gapped up, I think, 40 or 50 points from there on February, and it was broad market buying. Here, we're not seeing that. We're not seeing the broad market buying we saw last time. We are seeing positive behavior. We're seeing NVIDIA make new all-time highs on the actual stock, but the broad market itself is not participating in that rally. So something to keep an eye on. It's definitely not a, oh my gosh, this is the thing we're looking for. It happened. It's just something to keep an eye on, because when the broad market doesn't participate, when a big stock does that, there's usually something behind that. So just a FYI and something to keep in mind. Again, this is very early. I don't even think they've had the call yet. So very preliminary, but it wasn't, my point is, it wasn't the same broad market buying we saw last time. It was relatively muted given the crush by NVIDIA on earnings. So again, something just to keep in mind there. Tomorrow morning, we could be gapped up to new all-time highs. That's very possible, but right now we have a muted reaction. So I just found that a little bit interesting. Overall, the pattern remains up here just barely, but off of this low, it's pretty ugly. You have the spike low, the spike high, and then back into the below the pivot. So they hit like the 1.0 and came back down. Pretty ugly overall. I'm going to give the bulls the benefit of the doubt for right now, where we have a 1-2 set up and look for the upside, but it's really ugly. So I don't have a ton of faith in this playing out, but the downside pattern's just as ugly. It's going to be an expanded flat if it does play out. And so when you're in a bullish market and you have ugly patterns in both directions, the bulls get the benefit of the doubt. So just understand that both of these patterns are pretty ugly. That happens sometimes, especially in micro counts. And in those cases, we kind of sit on our hands and wait for the market to play out. So two options. We either have wave 4 in and we have a 1-2 and they're going to try to push it higher from here in this 3-4-5 to complete this wave 5 and that expanded B wave we've been talking about. Then we'd look for them to turn down sharply in C from the top that they make up here. They're now targeting about the 53.87 area with the move down today, early or late in the day on the Fed minutes catalyst. So that moved the target down about 15 points. And the other option is that we aren't done with wave 4. And you have A, B, and you're trying to complete some kind of move down here. But again, you would expect this to be a C wave into the blue box, and that's not what you're getting. You're getting overlap here. So we'll just have to give them a chance to play this out a little bit more. It is still a bullish structure in the general sense. We are above support, so the bulls get the benefit of the doubt. So overall, we look higher for at least another high and then to turn down from there. Additionally, if we're looking for a C wave down, we don't have a 5-wave move down. And so that would off of a high. And so that would be another issue that I have with the bears trying to take control here. So bullish until it isn't. This blue box here is our support below the 52, 60, 70 area. 65, 70 area is going to be a warning sign for the bulls. I wouldn't turn fully bearish there, but I would become more neutral. And overall, we have a pattern that we're looking to play out to much lower. But the current situation in the market is that we're looking slightly higher before we turn over and head lower. So again, the two counts we're looking at, the potential for this to break out to the upside into that 53.87 area. It's most likely going to end up being some kind of overlapping diagonal pattern. or this wave 4, which is really ugly, which isn't shocking. Wave 4s are just super ugly patterns. They're very hard to trade. They're very hard to track. They're corrective and overlapping, and that's why we stay away from them. But that would be, we'd be looking down here into the blue box for support and then up from there. So that's the two patterns we're looking at on the ES. And then once we get one of those to start playing out, we can have a better handle on exactly where we're headed from there. Over on the NASDAQ. On the NASDAQ, a little bit different because the NASDAQ is affected a little bit more by NVIDIA directly. So they did spike to a new high up here into the 18,873 zone. That does fulfill the target we missed on the way up. We were talking about that 18,850 to 19,100 area on the NASDAQ. We already hit the one on the ES at 53.49. We were talking about 53.50 to 5400. So they can push higher on both charts, but both charts have now fulfilled that missed target we talked about from wave 3, which is what causes expanded B waves. And nothing terribly wrong with the NASDAQ chart here. It's not the best, but you do have a potential 1-2 1-2 where you would be breaking out in 3 of 3. Your wave 2 of 3 is very deep, but held above this wave 2 and made a new high. It rejected the pivot, which is pretty common, and then pulled back. And now you'd look for it to move back up toward the 19,000 area or so, and then complete this 5-wave pattern into the 19,100 area overall at the top in a bullish structure. Now for the NASDAQ, if they're going to break down, they need to break the low that they tested here a few times at 18,678. Breaking that low opens the door into this wave 4 low for potentially a deeper wave 2 or an ending diagonal pattern ending up here and then looking for strong selling to the downside after that. But the NASDAQ did make a new all-time high and is pulling back off of that all-time high. So it can make a 5-wave pattern down and start its corrective move to the downside from here because we're coming off of a high. So we'll have to see what kind of structure we get to the downside. Overall, still bullish, still looking up towards that 19,000, 19,100 region until they break some kind of support. The major support to break is this blue box down here around the 18,400 area. If they get below that, that would turn the market neutral in my opinion, and assuming we get a 5-wave structure down, then we would turn pretty bearish at that point. So overall, still looking at this expanded B wave to play out. Not a lot has changed other than we got a spike of the high on the NVIDIA earnings after hours. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, become part of the trading team, and make sure that it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out. We also have our online training material. If you want to learn Elliott Wave yourself, we have our beginner's course and our advanced course. Our advanced course goes over more of the complex patterns, such as the advanced fib levels, diagonals, double and triple threes, flats, triangles, all those different things that make the market very complex. You can see on the screen here, this is one playing out on the chart, but we start off by drawing it and showing you the levels, how the waves are supposed to look, the fib levels, everything you want to see, and so you can understand the wave before you get into the chart. And then once you get into the chart, like we saw, you'll see how it hits the fib levels exactly like you want and then moves around. Again, Elliott Wave is a little bit of an art and a science. It's rooted in technical analysis. So when I say it hits the fib levels like you want, it doesn't mean to the penny every time and everything is perfect. But when it does play out, you can see we hit this wave 5 here, got to swell back to the start, and then this was 5 of wave 3, and then continued the pattern to the upside. So as you can see on the screen, it is helping traders understand these complex patterns. But as I said, this is the advanced course, and if you're just starting out with Elliott Wave and this is too much for you, we do have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very confusing when good news makes the market go down and bad news makes the market go up. And that's because Elliott knew that the news cycles didn't mean anything. He knew that key levels mattered and what happened when those key levels held and what happened when those key levels broke. And that gives you a huge trading advantage over the rest of the market. Now, this course is 25 videos where I go over 3 different parts. The introduction, where we go through your mindset and emotions, the expectations, the KISS method and why this works. The chart setup and tools, where we go through all the tools you need with Elliott Wave, how to use them and why. And Elliott Wave for Beginners, where we go through each of the waves, how to measure them, how to understand them, how to find these key levels, the pivot, the theory of alternation, the corrective depth theory, everything you need to know to understand this market in a way that makes sense. The cool thing about both courses, guys, is if you want to get both of them for a discount, you can get $37 off simply by getting the bundle course here. You get both courses for $177, which essentially makes the beginner's course a $30 course if you get the bundle. But if you don't want to pay anything at all, simply become a member of one of our monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material. You just saw we trade the SPY and the QQQ, and we swing in day trades, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you got to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that's killing it, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money. And it's how he structures that trade that's so unique. It's something you kind of have to see to understand, and that's another reason for that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. Kind of a sideways day. NVIDIA reported, and so far, very muted reaction, very flat. They spiked the high, spiked the low, and closed basically flat, which is interesting development considering how much they killed their earnings and how much they bought their earnings last time. So just something to keep an eye on. Again, this is just the 1 hour after the market, so it's very preliminary. We'll see what happens in the overnights and when we wake up tomorrow. Overall, still bullish because we're above support. We've held this wave 4 low. For the bulls, they want to push back over the highs, targeting the 5370 area next. And then they would ultimately look for 5387. For the bears, they would be looking to break down below this wave 4 and this blue box. And then it will really depend on our structure from there to see exactly what we got. Over on the NASDAQ, a little bit different as they spiked the high, as NVIDIA is a little more involved in the NASDAQ conglomerate. They pushed up to the pivot and failed and pulled back. Nothing terribly unexpected about that. They are still in a bullish pattern here, still in a bullish formation. If the bulls are going to take control, we would expect them to push up toward 19,000 next and 19,100 overall. However, if the bears are looking to grab this market, they need to break down below this low here at 18,678, and then ultimately below this blue support box, which would turn us into a more neutral market depending on what kind of structure we get off the highs. Guys, that is your market update for today. I'll talk to you tomorrow.